Good morning, everyone, and welcome to our monthly webinar. I am your moderator, Amanda McLean with North Dakota Farmers Union. And today we are going to be covering what matters smart insurance for farm and ranch operations. A few housekeeping tips before we get started. Everyone is currently muted, but at any time, if you have any questions, feel free to type them into the chat or the Q&A, and we will have time to answer those at the end of this webinar. Again, this webinar is being recorded. However, you'd like to rewatch it, you can find this one and our previous webinars by going to YouTube and searching North Dakota Farmers Union. Lastly, we ask that you please take the exit survey after this webinar, as this helps to continue to bring topics that are important to you and your operation. With that, I'd like to introduce our two guest speakers today. Our first guest speaker is Denny Stratton. He is the sales director in crop insurance for North Dakota Farmers Union and Farmers Union Insurance. Denny has been working for Farmers Union Crop Insurance the past 20 years. He first started as an agent in 2004, and since 2010, he has been in management. As crop insurance sales director, he works with agents in North Dakota, South Dakota, and Utah. Our other special expert is Tyler Van Bruggen, who is a Farmers Union agent in Valley City. Tyler Van Bruggen grew up on his family farm near Litchfield, North Dakota, and has been involved in North Dakota Farmers Union throughout his whole life as a camper, a torchbearer, a counselor, a county youth director, and a Farmers Union insurance agent. He began his insurance career at the Liban Agency in West Fargo while attending North Dakota State University, and he recently celebrated 20 years with Farmers Union Insurance. Tyler and his wife Angela and their three daughters currently live in Valley City. With that, I will turn it over to you, Tyler and Denny.
Well, thanks, Amanda, and thanks for the opportunity to present to our members today. It was important to me after growing up that I stayed tied to agriculture and stayed tied to Farmers Union, and getting a job in Farmers Union Insurance was a perfect way to accomplish both. So now I get the opportunity to talk to our members about farm and ranch insurance, and that's the main reason I got into insurance, is for the farm and ranch side of things. And when sitting down thinking about how I'm going to approach today's webinar, I couldn't help but think about the timing a little bit. Um, we're only a couple days removed from last year's major storm, one of the largest storms to hit our state. So after I touch a little bit on that, talk about why I do what I do, and then talk about some key terms and coverages to help you have a positive claim experience, some coverage options to be aware of in our farm and ranch policy, and then hopefully at the end how to make it all affordable for you too. And Denny's going to take over from there and talk a little bit about our crop insurance program and the different options we have there. So when I look and I see this date, June 20th and 21st, 2025, it still sends chills down my spine. I cringe a little bit. The events that unfolded over that period of time, hopefully are ones we'll never have to endure again. I've been told it was a once in a lifetime storm, but nobody seems to want to guarantee that for me, because I also hear some other grumblings that storms of that magnitude might become a little bit more common. So if that's going to be the case, I think it's important that we understand our farm and ranch policy and the coverage options that are available out there to us. If you consider or look back at the headlines that were kind of going through during that time, there was terms I'd never heard before: derecho, wake low, seeing 130-mile-an-hour winds, not just from a tornado in areas that didn't have tornadoes, and not just gusting to that amount. It was sustained over a 90-minute period. Those things in an insurance company, that's what keeps us up at night. But it's a good thing that we can be here when those things do happen. And if you have any doubt that I grew up on a family farm or not, what is it that farmers do anytime there's storm clouds rolling in? You don't always seek shelter like you're supposed to. You go stand in the back patio or in the garage and you watch the storm clouds roll in. Well, here's proof that I was a farmer at one point in my life anyway. This is the view from the back patio that evening of June 20th. You can see the tornado rolling a couple miles south of Valley City, a little too close for comfort. Our home sustained very minimal damage, but some neighbors to the south of us were far less fortunate. Um, we were also undergoing a construction project up at Lake Ashtabula during that time, putting a a summer cabin up, and that place up there was also a little less fortunate than we were in town. We were to the point of sheetrocking and insulating that building when it went down, and thankful to have had Farmers Union insurance in place during that time. It treated me very well, but anybody ever needs a good roofer, I mean, look at the shingles of that building. After 130 mile an hour winds for an hour and a half, I don't think there was a single shingle that was misplaced there. So I'd be happy to forward you their information. I'm also serving our Barnesville Water Board, and if you can see to the left of that tornado is our water treatment plant. It's between Jamestown and Valley City, a little bit north of the interstate. The three pictures on the bottom are the damage that that treatment plant sustained. It's just some siding, insulation, a roof panel, and a wellhead cover. Relatively escaped pretty unscathed for a tornado to be that close. But again, in that situation, there's some people that lost entire homes and farmsteads, and we're far less fortunate there too. But all that kind of leads me into why do I do what I do? What is it that makes me want to be an insurance agent? And honestly, there's two areas that I find gratification in my job. One is when an insured suffers a major loss and have a claim, and knowing that Farmers Union and I can be there for them in that situation. I don't take gratitude in knowing that somebody had a loss. Honestly, I wish that nobody would ever had a claim again and I'd be out of a job, but that's not life. That's not reality. Things like that are going to happen. But when I can be there when that customer calls at midnight or 1 in the morning and says, Tyler, I need to turn in a claim on everything I own. And I might be a little groggy at that time, and I asked, I said, what do you mean everything I own? And he told me the the tornado hit my farmstead head on and we lost everything. And that's a chilling, scary moment for the insured, for myself at that time. But again, when I can step up and rely on Farmers Union to be there for them in that situation, it's very gratifying that we can maybe be a silver lining for them and take care of the financial burden that they're going to incur in that situation. The other area that I find gratifying and something I can help everybody with on this webinar today is educating them about our farm policy. I love it when a new or potential or current customer comes in. We sit down, we talk a little bit about the farm and ranch product, talk about the coverages we have to offer, the way those coverages are paid out, and just educate them. I kind of look at myself as more of a teacher than a salesperson. And together with that customer at the end, they can make educated decisions on what coverages that they want to move forward with. And when they leave my office, hopefully they're leaving with a little bit more comfort in what they just purchased in an insurance policy. Insurance is tough because you leave with a piece of paper in your hand or sometimes nothing in your hand, and that's what you purchased. But you're really purchasing that peace of mind. And if at the end of it you understand what you purchased too, then I've done my job, and feel a lot more gratitude in what I just did. So insurance can sometimes have a bad rap. Not all claims go well. Sometimes claims go excellent. Sometimes people have a bad taste in their mouth when that claim process got done. But I can personally vouch for Farmers Union in the storm claims of last summer and say I think they did an incredible job in how they handled them. The reviews that we got back from customers were that overwhelmingly satisfied or beyond satisfied in how that was handled. I think Farmers Union adjusters do a good job in looking at the policy and finding any way they can to pay. Even if it's not in the way that I initially turned in the claim, they might say, we can't afford coverage here, but there's another area of the policy where we can pay some coverage. And I think Farmers Union adjusters are great at that. But I'm not going to say that Farmers Union has a 100% satisfaction rating when it comes into claims. No company will. There's always going to be things that happen, sometimes beyond anybody's control. But often when we get negative feedback on a claim, it's because there was a misunderstanding of what the person was covered for. The adjuster, again, can only pay for what the policy allows them to pay for. So I'm going to talk about areas that can be common causes for claim misunderstandings, followed by some key coverages that you're going to want to be aware of in your farm and ranch policy to help avoid those. But before I ever dive into coverages and buildings and property and things like that on a farm policy, excuse me, I start out by kind of explaining some key terms that help people understand what it is they're buying. So I've got a good friend. His name is Mr. I Am Farmer. And we're going to hear from him a lot today. So first thing that Mr. I Am Farmer says when he comes into my office a lot of times is he talks about, well, isn't that why I buy insurance? So we have to sit down and explain, you buy insurance to put yourself back in the situation you're in prior to the loss, minus any applicable deductible. and sometimes depreciation, which we'll get into later. But it's not intended to put you in a better situation than you're in prior to your loss. Um, in a scenario where you have a hail claim on your roof, and you go out and get an estimate to put a new roof on, and it doesn't match what our adjuster came out with on the claim. When we dive down into it, we might find that you had a 30-year shingle on your roof before, and your estimate for a new roof is for a metal roof because you decided to upgrade. Well, we're happy to pay you for the 30-year shingles that you had on there, and you can pay the difference out of your pocket to get that metal roof you've been eyeing for a few years. But we're going to put you back in the situation you're in before that loss, not necessarily a better one. Another common thing we see is that loss must be sudden and accidental. If you got a 35-year-old interlock shingle on your roof and it's peeled up and curling and cracked, and all of a sudden one day it starts leaking, you turn in a claim and we turn it into the company. The adjuster comes out and takes a look at it and says, there's no damage to these shingles. They're just old. And I get that call back from Mr. IM Farmer, and he says, my roof is leaking. How can they say there's no damage? Well, in that situation, that's normal wear and tear over a 35-year period. If you got that 1980 Volkswagen Rabbit that just finally kicks the bucket and you can't drive it anymore, you don't expect the auto insurance company to come in and buy you a new 2026 Cadillac. There was no damage to it. It just suffered its normal wear and tear, and it's time for you to invest back into your building and put a new roof on at that time. The other thing that Mr. IM Farmer likes to assume is he comes in and he says, everything's covered, right? I put the building on the policy, everything's covered. And it's important you understand the covered causes of loss and what you're actually paying insurance for. And we have different coverages. We have basic coverage, broad coverage, or special coverage. And I like to refer to these with my customers as good, better, and best. You can take the option of what you want. Our basic perils is a list of 10 items, and these are in reference to our farm policy. They may differ a little bit in our dwelling policy or our home policy, but we're talking about farm today. And our most common ones, fire, lightning, wind, and hail. I'm not going to read them all to you, but those two account for a large majority of the claims we end up having. Last summer's storm, all you would have needed is basic perils coverage to pick up those losses. That was loss caused by wind. But we live in North Dakota, and one thing you don't see on that list of basic perils coverage is weight of ice, snow, or sleet. If we get a heavy winter storm and your roof gets a big snow load on it and collapses due to snow load, if all you took out was basic perils coverage, we're not going to be able to be there for you and pay you in that event of a claim. But if you've got broad perils coverage on your buildings, then we're going to be able to pay for that weight of ice, snow, or sleet. Another common one we see there is sudden and accidental discharge of our overflow of water or steam. What that is the pipe maybe breaking in your wall and causing water damage to your home. If you only had basic perils coverage, we wouldn't be able to pay that for you. But I'll often get the time where that insured says, I don't want to deal with having to find one of these items that happened for me to have payment. Is there a policy that I can take out that just covers everything? Well, I can't say that we're always going to be able to cover everything, but special perils coverage is the closest we're going to be able to get to that. In special perils coverage, everything's covered unless the policy specifically excludes it. And some common exclusions are flood, overland flooding, intentional acts. We can't intentionally have a loss and do the damage ourselves and expect to get it paid for. Wear and tear, like the shingle example I gave earlier, over a 35-year period of time, we don't pay for wear and tear. A good example of where special would pay, where maybe basic or broad wouldn't, is let's say you come home middle of a rainstorm and you notice your picture window in your living room and you've got wet carpet underneath it, the sheetrock and insulation is wet. Special perils coverage, pretty good chance that that's going to get paid for. If you have basic or broad perils coverage, we're going to need to identify what happened to cause that area to get wet. If you look outside and wind had peeled back the siding, allowing that moisture and water to get in, well, basic perils coverage is going to pick up that moisture. Or if a pipe broke underneath that window or behind the wall and got that moisture in there, broad perils is going to be able to pick that up. But if there's no damage, no broken pipe, there's no hail dents or wind evidence on the outside, and maybe that window seal just kind of gave loose and started leaking, we're not going to be able to cover that for you on basic or broad, but with special, we're going to be able to pick that up. So it's important to understand, what did I take out coverage for? Did I pay for basic? Did I pay for broad, or did I pay for special? And understanding that ahead of time rather than after the loss sure helps smooth things over. There's some areas where we have some extra perils of coverage, particularly like on livestock. In this situation, we have a BL peril example. Adds in things like electrocution, attack by dogs or wild animals, accidental shooting, drowning, or the collapse of buildings. But generally speaking, most of our stuff is covered under basic, broad, or special. Another common thing I hear from Mr. I Am Farmer is that, well, I couldn't buy a new one for that. So it's important that we understand, do we have replacement cost coverage or actual cash value coverage? The difference in the two is replacement cost is coverage that intends to replace your item with another item of like kind and quality without taking a deduction for depreciation. Actual cash value takes that same replacement cost value, but takes out some depreciation for age, condition, and wear and tear and pays you accordingly. Both are okay. It depends on what we're insuring. I like to use the example with my kids sometimes. They've kind of outgrown this now and don't fall for it anymore, but I used to ask them, what's heavier, a ton of bricks or a ton of feathers? And of course, at a young age, they're always going to say a ton of bricks, but a ton is a ton. Well, in replacement costs and actual cash value, when we're dealing with real property, which is your buildings, in a total loss, it doesn't matter whether you have replacement cost or actual cash value. We're going to pay you whatever you had that building insured for in a total loss situation. So if I have a $300,000 building with replacement cost or a $300,000 building with actual cash value and that's totaled out, the company is going to step in and pay you $300,000 for that building. In a partial loss situation, however, that's when actual cash value really comes into play. All of our claims, whether you have replacement cost or actual cash value, are settled at actual cash value first. Maybe we have that roof claim where you have a 10-year-old roof that's $15,000 to replace, but the depreciated value of that is $10,000. Our company is going to step in and pay you $10,000 right after the storm. Once you've made the repairs, had it fixed, bought the new shingles to replace it, and spent 15 grand on that roof, then we're going to issue you a check for that remaining $5,000 and make you whole with replacement cost. However, if you decide not to replace that roof and just stick with the $10,000 check you're giving up front, then that's the final payment for you and you can move on that way. In our storm claim situations, we give 2 years to make those repairs. So we know that contractors are busy. They might not be able to get to it that first summer, but hopefully the following summer you can get somebody lined up to replace those shingles for you. And one of the last things I like to make my insureds aware of before we dive into their personal coverages is the importance of insurance to value. So Mr. I Am Farmer puts up a new shop in 2018, puts $300,000 in it. He says, I don't want to mess around with lesser forms of coverage, put special perils on that and replacement costs for me, and we've got a great policy in place for it. But then we don't meet with Mr. I Am Farmer over the next few years. And in 2020, we all know what happened. COVID-19, building costs practically shot up 30% overnight that year. So that same building now costs $390,000 to build. And over the next couple of years, general inflation, by the time we get to 2024, that building is $435,000 to build that he put up just a few years back for $300,000. Building catches fire and is a total loss. Insured feels pretty comfortable because he took out special perils coverage and replacement cost. However, we haven't met and gone over that value and updated over time. It's insured for $300,000 and it's a total loss. We're only going to be able to pay $300,000. That's $135,000 out of that insured's pocket that they're going to have to come up with in that event. That's not a fun situation for me. It's not a fun situation for the insured. So it's important you sit down and talk with your agent and update these things regularly. If it had been a partial loss and not totaled, we still could have ran into a co-insurance situation. That building value is now $435,000. We require that you be within 90% of that. Well, 90% is $391,500. If that building was insured for $300,000, he's 76.6% insured where he needs to be at. So if you had a $50,000 hail loss to that building and we end up paying 76.6% of it, that's $38,300. And then we have to take a deductible after that too. Also not a fun situation. So the importance of insuring to value, I can't stress enough. That also applies to our cattle blankets. You know, if the insured has 100 head of cattle back in 2022, back then they were valued about $1,500 a head. And now in 2026, lightning struck a fence line, killing 10 head of cattle. In today's market price, Maybe we value those cattle at $3,000 a head. Mr. Farmer thinks he's going to be okay because he told his agent he had 100 head of cattle a few years back. He'll probably be okay in this claim. But when you sit down and do the math on it, $3,000 times 100 head is $300,000 worth of value. Our 90% co-insurance rule means that he's got to be insured to at least $270,000. Him being insured at 150,000 means he's 55% insured, and we're going to end up paying 55% of that loss minus the deductible. So 10 head times $3,000 a head is $30,000 in his loss, times the 55% he insured for means we're going to pay him 16,500 minus his deductible in that situation. Again, update those values, keep them current. So finally, by the time we get to our machinery blanket, Mr. I Am Farmer has learned his lesson. He has $1 million worth of machinery blanket and goes through that every year with his agent. Very diligent about keeping that up to date. Well, Mr. Farmer picked up some additional land this year and added a hired hand, so he thought he could operate another combine and header. Bought one for $400,000 in the spring. First day of harvest, that combine catches fire. He's only had that combine for a couple months and hadn't got around to calling his agent and telling him about it yet. Now his $1 million blanket is all of a sudden a $1.4 million value. That 90% co-insurance rule means he needs to be at least at $1.26 million with a current limit of $1 million. He's 79% covered, so we're going to 79% pay that loss. Combine is a total loss, so $400,000 times 79%, it's $316,000. Now that insured can take that one of two ways. They can be thankful that they've got this item that they didn't call and talk to their agent about or add to their policy, and they're not going to be on the hook for the full $400,000 of it. The company's going to pay them $316,000. Or they can take a look at it and say, I'm going to owe, $84,000 out of my pocket for this combine that I've only owed or only owned for a couple months. Our policy is built in automatic coverage. We'll give up to $250,000 in automatic coverage for 30 days. So that's why I put in that scenario that he'd had it for 2 months. So if you do pick up a new item and you're getting it home from the dealership, wherever you bought it, you got 30 days to let us know, provided that that item is $250,000 or less. Once we've gone through all those coverage options, coverage amounts, and some of those basic terms, then we can actually dive into the policy and talk about people's personal situations and what coverage is going to be right for them. So the first part we dive into is their dwelling coverage. Dwelling consists of our A, B, and C. A is the dwelling itself, your structure. If it's an attached garage, that's part of your dwelling. If it's detached, it's going to have to be scheduled elsewhere. With our dwelling, if we have $1 million dwelling, we're going to give 55% of that for your personal property, so $550,000. I like to tell my clients, if we could take our home and flip it upside down, everything that falls is personal property, tables and chairs, furniture and clothing. That's all part of your personal belongings. But those kitchen cabinets that are screwed into the wall and would stay with the dwelling, that's part of your structure. The next part is our coverage C, loss of use. Any extra expense you incur because you had a claim falls under loss of use. This could be having to stay in a hotel for a week because you had a smoke claim in your home. Getting a cleaning company to come out and clean that up so you can live in there again. Those receipts for your hotel for that week are picked up under loss of use. Some items to consider that we have under our dwelling coverage is a special property floater. That's picking up items like jewelry, firearms. We had cell phones we insure under there too. Items that you want extra coverage on. Some of those items have limits, like jewelry and firearms have limits on the policy due to theft. And if those limits aren't enough, this is a great way to insure them to their full value. Also covers mysterious disappearance when that diamond falls out of the ring. Whereas on your regular homeowner's personal property, that ring would have to be stolen and it's got a limit to it. So talk to your agent about that special property floater. We have a limit of refrigerated products that you might want to buy up. Sump pump coverage isn't automatically included. There's a whole list of other items. I won't have time to get into all of them today, but I'll stress the importance of talking to your agent about those other items that are covered in your home or can be covered in your home. After we get through the dwelling part, we start talking about machinery. We already covered that we need to be within 90% of your overall value. But now we're going to talk about special perils versus basic on machinery. I don't sell a farm policy without special perils on machinery. It's very affordable coverage. And one area this is going to pick up for you is if your tractor or combine gets stuck and you pull it out and all of a sudden that thing is just not seeming to work the way it used to. It's just not working well. You take it into the dealership. That dealership says this frame is 5 inches longer than it's supposed to be. Well, you stretch that frame of that tractor or combine, pulling it out of the mud. If you refer back to that list of basic perils, you're not going to find farmer stretched the frame of the combine, pulling it out of the mud in that list. But again, special perils in that situation is going to kick in and pay. Foreign object ingestion, we used to always call this rock ingestion, but it pays for digger shovels, chains, fence posts, things like that. Any foreign object that's ingested into your farm machinery, we're going to be able to pick up if you add foreign object ingestion coverage. We also have a borrowed farm machinery limit. We're going to pay up to $10,000 in borrowed farm machinery automatically. But if you're borrowing machinery regularly, that's something you can bump up on your own or with your agent. Next part is our grain blanket. Now here's one area we used to have a co-insurance penalty and we've since gotten rid of it. Here you can list any amount of coverage that you want for your grain, but keep in mind there's going to be a limit. We're going to go 10% of that coverage for any one field fire. So again, if you take out $1 million in grain coverage, you're going to have $100,000 for any one field fire, but $1 million total overall for collision and overturn. Fire in a grain dryer is one of the more common ways we pay out the grain blanket, but there is some coverage for unharvested grain standing in the field that crop insurance isn't going to pick up unless it's naturally occurring. Oftentimes people will say, my combine started on fire. So I'm going to talk a little bit about the property versus liability difference on your grain blanket. Your combine starts on fire, you're able to get it put out, but it did hop the section line and burned about 20 acres of your neighbor's field. And you call me up to turn in that claim saying, my combine started on fire, it burnt up the neighbor's field. Do we have coverage for that situation? And honestly, if there's no negligence or fault on our farmer's part, no, we don't. They're going to want to turn that into their own grain blanket. Now, if our farmer did something wrong, then we might have some liability coverage there. Next one is our livestock blanket. Again, we already talked about that 90% co-insurance rule, but some other things to be aware of on our livestock coverage is we need to know about the death of that livestock within 72 hours. If a couple weeks have gone by and you're out checking your pasture and notice some carcasses laying there already down to the bones, it's tough for us to determine a cause of loss. We need to know within 72 hours what happened so we can get that turned in and adjusted properly. They're also only covered in North Dakota or within 100 miles. If you call me up and say, yeah, I put my herd down in Iowa for the summer, had some access to pasture, tornado came and lost them all, I'm not going to be able to do anything for you there. We need to cover them in the state of North Dakota or within 100 miles or find coverage elsewhere in a different situation. Same thing with public sales barns, stockyards, or well in transit by a common carrier. We can't cover them in those situations. I'll often skip over coverage E when I'm talking with my customers for the time being, because I like to go into coverage F first, which is our farm buildings and structures. 90% co-insurance rule applies here. The deductible that you would suffer in the event of a loss, or especially in a storm, is per location. It's nice that it's not per building, because I can't imagine a hailstorm if we had to pay that deductible for every building. But however, if you do have two farm locations, you're going to incur a second deductible if that hailstorm hit them both. On building coverage, I urge you to pay special attention to your perils of loss, basic, broad, or special, and particularly on grain bins. On our grain bins, we got some moisture on our corn and the vents on top freeze up in the wintertime. You go up and turn on that fan and that ceiling of that bin poofs up. You're not going to find that on the list of perils in basic or broad, but we're going to be able to pick up that loss for you with special perils. After we've gone through all their buildings, livestock, grain, machinery, then I like to go back to coverage G. And I just call this everything else. Scheduled farm personal property. If we didn't find coverage for it elsewhere in the policy, this is likely where we're going to be able to do that. Here's where we cover items like tools and supplies, your grain dryers, hopper bins that are unanchored. If they're anchored, we can put them on F with the other buildings, but if they're unanchored, we need to have them on here to have coverage. Tack, feed or hay, seed, chemical fertilizer, or any grain, livestock, or machinery you don't want blanket coverage on and you want to schedule individually. That all falls under our coverage E. After we got done talking about the property, all of your personal belongings that you need to insure, We can't skip over liability. People often just put that on the back burner, don't think much about it. But it's just as important as your property, and in many cases, maybe more important. Liability is payments to other people for bodily injury or property damage caused by our insured, where our insured becomes legally obligated to pay. And your insurance company, in defending you, has the right and duty to defend you. That might not mean a lot to you, might be a bunch of words when you're looking at it, but you think, Tyler, well, how much do I need? What's a good amount? Well, our farm policy comes with a maximum limit of 1 million if you choose to take that coverage, or our minimum amount is 300,000. I tell people that people are going to sue you or come after you for what they think they can get out of you. If a college student is involved in a farm accident, doesn't have any assets to their name, versus Mr. I Am Farmer, who's got 12 bins full of corn and soybeans, $1 million in insurance, machinery blanket, land assets. No jury or judge or court is going to award the penalties in those situations the same. So I tell people, figure out your net worth. Let's at least insure to that amount, and maybe take out a little bit above that, because of oftentimes these limits get diluted. The court costs and attorney fees are paid out of these limits. If you have the $300,000 minimum liability and we end up spending $200,000 in attorney fees, there's not going to be much money left to protect you in that situation. Also, another common thing we see is additional insureds. Maybe we have a grandfather, father, and a son farm operation. Very common. Very common for them all to be insured on the same policy. But if their limit is $1 million and all three of them are named in the suit, we don't have $1 million in protection for the grandfather and the father and the son. We have $1 million split between the three of them. Then oftentimes that's not going to be enough for 3 farm operations like that. So in the event that your need exceeds that $1 million maximum that we have in our farm liability policy, we encourage people to consider an umbrella. It's my belief now, maybe different than it was 20 years ago when I started, but now I believe everybody needs an umbrella, at least $1 million in extra coverage above and beyond everything else. I've said farmers need an umbrella since the day I started 20 years ago. But now with the sheer dollar amount we're dealing with in farm operations, 1 million isn't enough for you anymore. The way an umbrella works is it's an additional coverage above and beyond your home or farm, which we need a minimum of 300,000 to qualify, above and beyond your auto, which we need around $500,000 to qualify, watercraft of 300,000, and your ATV or motorcycle for 300,000. If any of those limits get exhausted, your next level of coverage comes out of your umbrella, and we can take out anywhere from a $1 to $5 million policy there. And it's very affordable coverage when you start to think about what court costs and attorney fees can rack up to in a major loss situation. If we're insured for that $300,000 maximum, it's going to be very difficult for the insurance company to stick around very long and protect you once they've reached that $300,000. We're going to end up having to say good luck with the rest of it. We've paid out our policy maximum. Having this umbrella in place keeps that insurance company around, protecting you and fighting on your behalf for a lot longer. Now, I know as an agent, we got to be cognizant of our insurance budget. You don't have a blank check to spend on insurance, and we understand that. I often hear the term, if I take out all this coverage you talk about, Tyler, I'll be insurance poor. Very common term I hear. And that might be true. We do need to worry about how much you're spending, and it's important to me too. I want to keep you around as a customer for a long time. So we got to look at different ways we can lessen that premium for you. And the first one we go to is deductible increases. The days of $1,000 deductible or $2,500 deductible are long gone. The company's new minimum deductible is $3,000. You can buy lower, but you have to pay extra for it. But when I get to my farms, I kind of treat that as a $5,000 minimum. And in some cases, we can go to $7,500, $10,000, or $25,000. I just want to make sure that my customer is okay with not only having to pay that deductible once, but if we've got a multiple location situation, they might incur that deductible twice. Is that higher amount you're taking out still something you can financially handle? Or likewise, if we have a small kitchen fire in March and the storm clouds roll in June, we've already paid a deductible once. Now we got to pay a second one that year. Is that something you can handle? But the more you're willing to take on your own versus involving an insurance company, the better we're going to be able to keep your rates for you. Another thing to consider is the cosmetic exclusion. When you take out special perils coverage on your building, we're going to be able to pay for a cosmetic loss. Those hail dents, just put some dents in your garage door, or the roof of your grain bin or your gutters, you can exclude the cosmetic loss. And if that garage door or grain bin roof or gutters are still serving their purpose, they function just fine, they've just got some small dents in them, you can save about 10% off your rate by not caring about that loss, not turning it in, and not having coverage for it. You can also choose to say, well, in my home, I'd like to have that garage door taken care of or my gutters taken care of, but I don't care so much in my bin or my shop or the pole barn. So you can exclude cosmetic loss in those outbuildings and still keep it on your home. Another option is through the paid in full discount with automatic payments. If that big check for paying in full is a lot for you to come up with at once, we can divide that out monthly for you and still get that paid in full discount as long as you have that premium come out of your account automatically. That's been a real popular thing for insureds in the last 5 years or so. Also, consider your coverages. Do you need special perils or broad perils? Like I mentioned about our storm last year, basic perils would have taken care of that claim for everybody. That's a wind loss. If you're not so concerned about those extra bells and whistles, maybe basic is okay for you. Do you need replacement cost? Maybe actual cash value, just getting the value of your buildings back that you hadn't got out of them is enough for you, and you don't need a new one to replace it. So consider things like that. It's my job to present everything to you, and then hopefully you can say, I appreciate that, but I'm going to go with this amount of coverage and be comfortable with it. And then the last thing that we talk about is what can you self-insure? I'll often meet with guys that have 12 bins out there of 1,000, 2,500, 3,000 bushels that they prefer not to even use anymore unless they absolutely have to. And a pole barn that doesn't get used. But yet they're paying $20 here, $50 here, $100 here in coverage. If you elect to self-insure those items and not have them on your policy, we can maybe take that extra $300, $400 you saved in premium and apply it to that $300,000 shop that you put up that should have had $435,000 on it and have the appropriate coverage on a building that's important to your farm operation. I could spend 2 days talking about our farm and ranch policy. I'd love to have a web or a presentation on that, but I got to be cognizant of our time and want to leave some time for Denny to talk about crop insurance for you, and be happy to answer some questions at the end. Denny, I'll turn it over to you.
Thank you, Tyler. Very nice job. Really what we're doing is talking about stuff that people don't realize they can buy. They don't realize how affordable it can be, or they just miss the boat. We worry a little bit when we have those drier years, and there's still a few areas out there where field fire is kind of an issue. Um, you know, it's a really easy to understand policy. It's a very economical policy. Usually most customers pay about, with one of our carriers, about 25 cents for $100 an acre of coverage. It doesn't really get any better than that. The problem we run into is we'll have really dry and really windy areas and years sometimes. And what happens is people go to buy it, but a lot of times these are private products. They're not through a federal program. So the carriers sometimes will put a moratorium on it. They'll just stop the coverage. So what we do is we try and tell everybody, please prepare. Talk to your agent a little bit if you're worried about this stuff, so we can get you in and get everything taken care of in time in case something like that does happen. Field fire is just a simple policy. It's just loss due to fire. You can get a little bit of coverage on that through your grain blanket, as Tyler said earlier, on your farm and ranch policy. This just adds more coverage to it and tries to fill in a little bit of a gap where crop insurance isn't available. Next slide, please. Hay fire is another one. Yeah, also you can write. Agents are able to help customers with that on their farm and ranch policy. It does have limitations. I believe $30,000 per stack. Is that right, Tyler?
Yeah, I believe that's still our limit.
Okay, so here you can get up to another $100,000 per stack. And we do see a lot of people buy this. We do see a lot of claims get paid out on this. It's actually a risk I'm worried about for a lot of people. Right now, I talked to some of our agents in South Dakota, for instance, and I just said, what is hay selling for this year? I've heard anywhere from $200 to $300 a ton. Irrigated alfalfa sometimes even more, depending on what people want to pay for it. So if they're paying upwards towards 200 or even 300 per ton, this is definitely something worth looking at. Just to make sure you're covered and prepared in case you have to buy feed. Let's go with the next one here. Pasturage fire, and that is a word. I had a tough time dealing with the word pasturage, but that is how they state it. That is not a typo. That's another one too. I would say probably an average, maybe a buck 50, buck 60 for $100 of coverage is what you'd pay in premium. Now, granted, there's going to be limitations on how much coverage you have, depending on the certain areas you're in. But that's another one too. We tell everyone, don't miss out on this, please. If you're worried about it, let us run some numbers and just show you in case you do think you need it. I don't want you to want it later and you can't buy it. And back to the whole expense here. I growing up, pastures burned and nobody thought anything of it. That's just free grass. We're fine. But now when we're talking about $200 to $300 a ton for hay, and people are trying to replace some of that pasture, now we have a legitimate worry. So that's another one to look at as well. Crop hail. You know, the thing about crop hail that we run into a lot is what people do and do not know about their hail policy. A lot of people don't realize most hail policies actually can extend into June 1st of the next year if they need it, but don't ever count on that. We've had a lot of people thinking they had more time, and then we had a hailstorm on June 3rd or June 6th, and they just missed it. So we tell everybody, please talk to your agent, let them know what crops you have, let them run some rates for you. There's lots of different deductibles and rate options out there for you that they can go to work and make it affordable and give you the coverage you actually need. We also recommend a continual policy. Those are kind of nice because if you do get busy, you're tied up in the field and whatnot, and you forget to contact your agent to get hail coverage on there, it's actually just going to renew with the same dollar limits and the same deductibles that you had the prior year. And then you have time to actually edit or change those if you decide you want something more or less. But at least you have the one that we always tell everybody, find one that you really like. Maybe it's just a zero deductible, or maybe it's a higher deductible just to cover your catastrophic losses. But find something like that you're comfortable with and lock that in and a dollar amount. That way, if you forget, you feel good about your decision. And hail's such a simple policy for people. I love it. It's very simple math. You can see the example on the right. If you'd bought $250 an acre of coverage and had 40% damage on a zero deductible policy, they would pay 40%. So you'd get $10,000. That's hail. That's how the adjusters like to work. We always recommend the lower deductibles just because it's a lot easier. There's sometimes some frustration if a person has 14% damage and they have a 10% deductible or 15% deductible, so on and so forth. So, um, also with hail, there's more than just uh hail. A lot of carriers, depending on which one you go with, you can get fire, theft, vandalism, transportation. There's a lot of stuff built into it already. Another endorsement that people have been asking a lot about has been wind. Uh, the issue we have with wind is they always have a deadline on them. We have multiple crop carriers we work with, but we try and tell everybody in the spring, if you're worried about wind on your corn, please let us know so that we can run you the quotes and see if you like it and make sure you're covered the way you should be, because some of them might have a sales closing deadline of June 15th. So if you call in August, we might have to work a little harder to find something for you. Um, and that's where I'm at on hail and wind.
Well,
You can go
thanks,
next. Yeah, thank you.
Denny and Tyler. Um, if you guys are done, I think we'll move into Q&A. Or, oh, you have a little bit more, Denny.
Oh yeah, on this one, I just want to bring it up because this is an issue that's coming up. Forage production is a September sales close policy, and we like to remind anybody that has any alfalfa or hay out there they're trying to insure to reach out to the agent just to see if they want to get coverage on that. And a lot of them that don't buy forage production anymore are buying the pasture rangeland forage, the PRF rainfall. It's just a little easier for them, and that one's due in December. So those are two I definitely say go see your agent to find out more about them before fall. And livestock risk protection, that's a year-round kind of policy. We can sell that on any trading day, basically. But the way cattle prices are holding stronger, people seem to be a little more worried about protecting that price. And that's exactly what livestock risk protection does. It just, you've probably heard it in the webinars before, it's just going to protect you against declining prices. So that was my last one, I promise, Amanda.
No worries, no worries. Well, one of the first questions I have is for you, Tyler. So you talked a lot about, general farm policy. What about people who are interested in like agritourism activities, farm tours, weddings that are starting to pop up on, farms, hunting leases? How's that fall under a general farm or ranch liability policy?
Absolutely, it's a good question. Yeah, something that's becoming very much more popular and common. We do have an agritainment endorsement on our farm policy that we can pick up some of those items. It's going to be limited, and so I can say in a majority of the situations, we're going to probably search an outside market. If it's something that's happening regularly, maybe we need to get a commercial policy in place for that. If it's a one-time event like a wedding, we can take out a policy, a special event policy just for that day or 2-day period, whatever we're looking at. But if it's a general thing that I don't want to get into too many specifics because the best thing you can do is talk to your agent about it. Give them your details, or you're bringing any income, or people coming on your property. That'll help your agent determine if it's something we can cover right from the farm policy under the agri-tainment endorsement, or if we've got to go elsewhere and get some additional coverage for it.
Denny, this one's maybe more for you and Tyler, but uh, how are insurers, I guess not just Farmers Union Insurance, but like the whole overall insurance industry, how are they adapting to these increasing weather volatilities that we've been having in the, I guess you could say kind of climate related risk, but we've seen a lot of major variabilities in our weather the last few years and a lot more unpredictable. How is the overall insurance industry adapting to that?
Well, lucky for us, we have the law of large numbers, right? So most of these carriers are nationwide or even bigger, right? And there's always going to be good areas that produce really well. There's no claims, and it's kind of like having a diversified portfolio, right? One of them's always going to be doing bad, and one's always going to be doing really good, and hopefully a bunch are still all right in the middle. So they they work at it, but it's not as bad as I think people think. Uh, and the thing that's really helped out a lot too is these new crops and hybrids and varieties out there have really, I mean, think of the wind we've been getting the last couple of years. And well, I was talking about wind coverage on corn, but it's just so strong now. We don't have as many issues either with that. So I think it's not as bad as we think it is.
And then Tyler, maybe just a recap. I think this is good. You probably covered this, but just to recap for producers, what is the most common coverage gaps you discover when reviewing a farm and ranch operations insurance program?
For me personally, I think I talked a little bit about it in the thing in my presentation, is insurance to value. Um, we can talk about high deductibles and can I afford a $10,000 deductible on my farm? Um, but really, if you're not insured to value, you're going to be incurring a lot more out-of-pocket costs than any deductible that we offer. That scenario I gave of a $300,000 shop less than 10 years later is $435,000 to build. $135,000 out of your pocket would pay for a lot of insurance premiums. Um, so I'd rather see people bump up their deductibles and save money that way. You can handle maybe the $10,000 deductible or $5,000 deductible. Um, but man, $135,000 gap is not fun for them to deal with. So allocate those coverages to what's important to your farmer operation. You can usually do so without spending any additional premium dollars. It just might mean self-insuring some of the things you don't care as much about. But yeah, I'd say insurance to value is probably the biggest gap that I come across.
Well, thank you, Tyler and Denny. I don't see any other comments coming in, but thank you both for taking that time, explaining a lot of the basic farm coverage and covered options that are out there. If anybody has any questions for Tyler or Denny, feel free to reach out to them. I will be having a follow-up email with their contact information and the link to this recording. Also, I want to invite everybody to our July webinar. We are going to have the state FSA office, and they are going to be talking about the new additional base acre updates for 2026. We haven't had a base acre update since the early 2000s, so I think there will be some good content, and invite everybody to attend that. And again, thank you everybody for joining us today, and hope everybody has a great day. Thank you. Bye.
Thank you.
Thanks for having us.